Hello, a very good day to you. Welcome to another week. Happy New Week to you. I believe this week will be very peaceful and extremely profitable. So, as usual, we're going to be doing market analysis on for some trade for some instruments. So, this is um USD JPY, United States dollar, Japanese yen. So for some time now, it has been on a steady uptrend. This is the H1. So let's go to the H4. You can see it has been on an uptrend for a very long time now, and you can see. So that's it. But currently is seems like it's doing some pullback, some retracement from here down to the EMA, and is responding to the trend. So you can see a double top is about forming here. This is the H4. So you can see a double top is about forming here, and it will tell if it is going to form a reversal pattern or if it's going to break the resistance and continue the trend. As you can see, the trend seems like a bit weaker from this point. Yeah, it seems it's getting weaker due to the deeper retracement. So currently, let's look at what we might be fixing this week. So let's check out what happened last week. Turn your phone down. Let me turn my phone horizontally. Okay, I've not done that. So here we go. Let's look at the week. What happened last week? Oh, that was a very nice bullish move. Tried last week. It was all bull. So there's a very high tendency the bull is going to continue because it closed with a full candlestick momentum with a very tiny wick at the top with a longer rejection from the bears. So the bullish move is still intact. So let's go to the daily candlestick. Okay, you can see the daily still closed bullishly. Okay, whereas at at this point where the market did a pullback here, this bearish candlestick inside bar. Okay, before I did this range and came down, I guess that's the point that it's trying to form a double top here. Okay, you can see it at the daily. You see this is at the same, it's approaching the same level, or this is at the region already. So this week we're going to be looking at if the market is going to break above this region or is going to pull back, or maybe it will start a consolidating phase. So currently it's just to sit back and relax and watch what this pair has to offer this week. But if you're good in scalping, you could still scalp it though. But as a day trader, you need to know the overall market trend in order not to get caught up, or in order not to lose money and get confused of which way the market is going and which way is not going and all that. So currently we'll be looking at if the market forms a bearish move, maybe the buyers pushed it to this point, then sellers, maybe they took their profit and sellers decided to push it down. Once you get a bearish move, you can jump in and take your profit here. Okay, so this is the two area of value we're looking out. If you can short, you can short a very short term or buy. And though the overall trend is still bullish, though it's still bullish, but in order not to get caught up with a very deep retracement, or your stop loss be getting haunted or stopped out, it's best you get a clear cut of the market from this downtrend, from this down time frame, and take it. You won't want to be entering the trade at a very wrong level. Okay, so currently we are experiencing a bit weaker trend on the H4, though the overall trend is still bullish, but a pullback is very imminent at this level right now. So it's either you wait for a total breakout from this region, or you wait for a bearish candlestick at this region, then short and take your profit here, or you wait for a total breakout, maybe a breakout then a text, because there might be a lot of force. This is the kind of region you get a lot of force breakout. Okay, let me draw it out for us to see clearly. This is a region where we can get a lot of force breakouts. You might think, the market has broken out from this resistance. You jump in, the next thing you see is back into that this region. Is back into this region, and you say, oh, I've been stopped at, or I've been stuck in a trade. You get. So if the market break above this region, you have to wait for a retest. Okay, so you to be sure that, okay, yeah, it has broken out. Same if it comes back to this region and claim to have broken out, it will be looking at this level. Okay, so that's just the easy way to trade it, but keep in mind the trend is your friend. Okay, so what should we be looking at is buy, but in as much you're looking at a region to buy, you should be looking at a region at which you buy comfortably. Okay, so that is that. Let's switch to another instrument. Okay, and that will be let's look at USD card. USD card has been doing great. Yes, let's check out last week. I believe we did an analysis on USD card last week when I said the market is heading for this resistance, and it actually did. Yep, if you took the trade, you'll have earned profitably from it, but you can see it retested this region first before it went back up. So with this high momentum, though the overall trend is bullish, though is likely to break through. Let's see our daily. Whoa, that was a nice candlestick right there. Though this zone is a very strong demand zone, but let's see if it could break it or not. So in order for us to see that as a day trader, we're going straight to the H4. Yep, it's still at a region that a pullback is very imminent, but well, let's price action show what it has to offer. But looking at this trade, you can see it's already consolidating here between these two boundaries. Okay, so there's a high probability that most of the buyers are going to take their profit when they get at this point. Then definitely shorters, the bears might step in to push it down. Okay, but if for instance it goes above this region, before you jump into the bulls, you have to wait for confirmation. That's a retest in order not to get caught up. Okay, so what you need to do is stick to your H4, go to your H1, and let's preferential the boundary, upper boundary has been broken. Wait for a retest, then market facing the bullish direction before you jump in order to avoid being trapped. Okay, just as what happened here, it was selling, so to this region, go to this point and reversed. If you are to enter this market, is that it happened here and it happened here. Okay, you're supposed to enter the trade at this point. Okay, then your stop loss below this support region. Same here, and you can see how it went all the way up. Okay, so it's not just okay it's going to go bullish, you just jump in without having a confirmation. You might get caught up, and you will be stopped out, or you might get trapped in the market, whereby making you to lose money, which is not really nice. We are careful traders, and we don't have money to give away to the market. As a forex trader, your major goal is to mitigate your losses. Your potential loss is very, very, very important than your potential profit. So your capital should be your watchword, protecting it and guiding it jealously. So regarding this trade, is at a reasonable resistance that shorting is very, very possible, though is a bullish trend. That's a pullback is very possible. So is either you wait for a pullback and evaluate the market trend if it's still bullish, or it has reversed into a bearish trend before you want to buy again, if you want to continue the buying. But at this point, I advise you wait and see price action, either breaking over or reversing. Okay, but at this point, a pullback or a trend reversal is very eminent, because you can see it's already struggling with the resistance, though it's still a bullish trend. Currently the USD is strongest across board. Yep. So I guess what the AUD. Okay, let's check out the Euro USD. Euro USD. Let's see what happened for last week. Okay, a very strong support has been broken. Okay, yeah, we talked about it last week, and it did exactly what we talked about the pullback. I remember I said something about this, that the market is going to pull back close to this region, which it did, and you can see it formed an inside bar. That's an indecision candlestick, whereby if we go to the lower time frame, we see the market is already consolidating. Yep, as you can see, on the day one is a bullish doji, which is also an inside bar. So the market is already consolidating here. No precise direction has been symbolized yet, and we can see it's getting closer to the distance from the market, and the moving average is becoming more closer, whereby symbolizing a weaker trend. But notwithstanding, the trend is still bearish. Okay, so as a day trader, what you'll be looking at is shorting, or a very short bullish run. So moving on to the H4, we could see, okay, this is where this strong consolidation is happening. You can see it's already reacting to the moving average, getting a lot of rejection and pullbacks, and indecisive move. Okay, so in a scenario like this, I would advise you just stay away from the market, unless you just want to scalp. It's advised to stay away from the market in order not to the market not to mess with your psychology or emotion or whatsoever, because as we can see here, it's just a lot of fuzzy move. Okay, so that is that for now, unless if you must enter this market, it's best you enter the market at this region where it has a higher purchasing power. Why at this other boundary it has a higher selling power. Okay, so at least you could grab some pips from there, but you have to do that from the H1 after getting a confirmation of the move, of the direction you're heading into. But I advise you to just stay away from this market for now until there is a definite move. Okay, so that is that for USD pair, because I guess that's the same thing that is happening across both the okay both the GU. Okay, seems the GU has a higher selling momentum. Yeah, because last week candlestick was has a very full body candlestick with minimum wicks indicating a very high selling power, selling momentum. Well, but the D1 is having a slight rejection from the bears, but it's not that slight. It's still indicating a very reasonable selling power. Though the market might do a reasonable pullback this week to an extent of something like this, because that's a reasonable support on resistance. You might want to try to retest the zone before shutting further. So you could be looking at a bullish run here, but you have to wait for a reasonable okay, you can see there's a little bit of consolidation here. Okay, trying to accumulate power to retest this zone right here. So we have to wait for confirmation from the H1 and the H4. After seeing from the H1, the H4, you go to the H1 to confirm the direction before you jump in, not just jumping in. Okay, so that is that. Let's go to stock. Okay, there's a US 500. They did a lot of shorting this week. This has been on the down trade for about a month now, a month plus now. Last week I said something on this that it's going to pull back to this region, which it did. It did perfectly well. I traded on this, a body boost, and still partook on the bears. So, and here you have a very strong rejection from the bulls, from the bullish move. You could see it got to this region, and the bearish traders took it way down. And if we go down to the daily, you see it market open with a gap down, indicating a further sell. Though it might want to try to cover the gap before the shorting continues. Okay, so likely we might be expecting a pullback up to this region, then it zipped back down. You see the support has been broken. The support has been broken, and if we retest it, then the sell continues. So what you should be looking at now is the opportunity for you to short. You go to your H4 and you watch out for a bearish move, then come to your H1 for a very nice entry. That's for confirmation. Okay, in order for you to have a more secure or comfortable trade. Okay, so that is that. This is a trend that is on a bearish move, and it won't be nice you going against the trend, because the market always respect the trend, even when it's going against it. And whenever you're trading, you should always watch out for exhaustion candlestick. Exhaustion candle, you can see this is one that just ran off from this whole point. You could see that's all called it. This is a demand zone. You can see it happened here. It just ran out of it, but that was when the market was, I think the market was in a, okay, it was still in a bearish move though. A lot of sellers took their profit off at that region, and the buyers quickly took an opportunity of it, and the speed the market went off the region was very high. But like I always said, it always respect the trend. Okay, as you can see, it came back down immediately. Okay, so that's why you always take your position from the H4, even when it was giving all these signals on the H1. You could go, if you go to the H4, it's still telling you bearish. Okay, even when this candlestick formed, okay, this H4 formed. Yes, that was at the close of is in New York. Okay, let's get the H1 and see what happened. Oh, H1, H1. Okay, I guess that's not guessing. This was the candles, or the full exhaustion candlestick that happened at the close of the H1. Okay, and one another thing you could use to filter your trade is, even at the point of this at the close of this candlestick, this extremely full bodied candlestick, you can see it was still below the moving average. Okay, this is my grey moving average. It was still below it, meaning it is still signifying, even if it's bullish, it's still below it, and it's still a bearish trend. Okay, what you could have done is to wait for the market to break above it, just like what happened here. Retest it, you can see there was an inside buy here, then it reversed. It's only on this condition you can say, okay, yeah, it seems the trend is changing, and boom, you buy. Okay, let's come back here. You see the market pulled back, and it's it closed below the moving average, but upon retesting it, it seems like it just switched back to the initial um short bullish trend. Okay, but one thing you need to understand is not all the time the market retest the trend, the moving average, or the region immediately. Just like what happened here, you could see it closed below it with full momentum, and before it started, it didn't even come close, but it only tried retesting and closed below, and that's your entry point. But those are the trend with a very high momentum. The farther the market is from the moving average, the stronger the trend. Okay, so that's just that. You could use this as a prerequisite for most of the USD pair. Okay, I won't want this video to go any further. We've done for the JPYs. Okay, let's check out the AUD JPY. The JPY is on a bullish trend. It just guess it had a pullback, but the trend is not the bullish trend is not extremely, it's not really that strong. It's not really that strong, but in taking trade, you could see, okay, this is the daily that closed bearish. That's Friday, last week Friday closed bearish. You could see the bullish trend is not really that strong, but it's still active though. It's doing a little bit of fuzzy consolidation here. So if you want to take this trade, like I said earlier, you go to your H4, look at the level at which the market is, check out the overall trend, check out what the price action is saying, what that meaning what that candlestick is saying. Go for confirmation on the H1 in respect to the level. Like I said earlier, if it's in line, then you could take the trade. But if it's not, if the H4 is saying something else, the H1 is also saying something else, and the trend is saying something else, even if it's at a reasonable value, is at a reasonable area of value, it's best to stay away from that trade till this level aligns amicably. Okay, so with this, I believe you could have a profitable week. So you have a lovely time with it, and don't forget to learn, because that's the only gates where we could be, or could, we can and shall be extremely successful in the forex market. Thank you very much for your time. If this is the first time of you coming to this channel, please do hit the subscribe button, and subscribe to this channel in case of future videos. And if you benefited from something from this video, please do well to hit the like button And if maybe there is something you still want me to cover or talk about, you can just drop that on the comment section below, both questions and anything else. So thank you very much for your time. Speak to you soon.